Good morning, everyone. How's everyone doing this morning? What's up, Ronan? How you doing? I'm good. I'm glad it's Friday. What's up, Alexander? How you doing? Oh boy. Whew. Oh, okay. I am lazy today. I have been lazy today. You could tell by the way I traded on the last trade, and I put for everyone who's in the room, um, in the execution class replays, I put in an example of when I took a trade that didn't work and what it told me about how I need to change my mindset to do business properly and how you need to focus. So check it out. Um, and that's what we're going to be doing in the room. It's going to be very practical information. We don't want really, don't a lot of trading is like it seems so esoteric. It seems like so kind of convoluted, you know. So I just want to cut through all that because people really don't have time to be screwing around. They've got lives, they've got kids, they've got hockey practice. You know, they don't have time to like go through these rabbit holes. So why are we doing business here? Does this make sense? Right? Does it make sense to be going long here? Is there a valid business reason? Those are the kind of things. And when you get stopped out, how do you use that information so you can adapt and recover quickly and start doing things properly? Or, in my case, figure out that you're not tuned in at all and you should take a step back, get some discipline, and then come back and start work again. It just helps that way to let's use trading psychology before we blow up our accounts, huh? Right? Let's try that. Let's try using trading psychology in a healthy way, combine it a little bit with the business, and this way, people don't have to endure the hardship that they do. You're still going to get stopped out. You're going to still have losses. That's just business, right? So overnight inventory was kind of short. Now it's long again. It's been up and down. You can see we closed down here. Inventory was long, dropped down. We did a look below and fail of the previous day low. Now we're back. So it's like we had a bit of a sale in the overnight, huh? We had a sale. That's how you can think of this, right? You want to think of this as a sale. We had a sale in the overnight session. So at night, they put price on sale. And now price is right back to where it was yesterday. So after all of that rigmarole, right, it's business as usual. So we are going to open in yesterday's range, in yesterday's cost basis. So what you paid yesterday, you'll probably pay today. Okay? So how do we trade this? Well, handy dandy 1 minute chart helps us out because it shows us where the cost basis is. And now we did beautiful look above and fail of 19. On my 4-hour candle chart, I'm watching 14 and a half. And if we stay under 14 and a half, I think we'll move back down and correct inventory lower. But I want to show you something on the 1 minute chart. This 1 minute chart today is a picture perfect chart for what we call distribution. Look at this, ladies and gentlemen. This is the move underneath VWAP, so you get a liquidation move. But it's just beautiful because liquidating inventory is taken into wholesale hands. The shorts come in under 44. Wholesale builds a long position. We come in. Now check this out. Look at how beautiful. Look at this distribution. Just underneath VWAP, but right there. Do you see that? So this sideways action, that created price stability. And the people who shorted here and added here helped push the price up here. But you can see that we've had, it's really cool. Check it out. Sideways brings buyers. Sideways, still above this cost basis. Every time it drops down into the last cost basis. Do you guys see that? Here, check this out. Every time the market drops, it puts in a cost basis, and then it drops again, and then it drops again, and then it drops again. But do you see how it doesn't violate the last cost basis? It's so cool. You don't need any specialized software to see this. All you need to do is to be able to pay attention. Not bad, huh? I mean, it's free. I mean, if you have the ability to draw a box, you're in business. You know, there's no rocket science here. Right? It's the distribution of a product. So that's why I want you guys and ladies to look at these candle charts. Thanks, Jimmy. That's why I want them to look at these candle charts, you to look at these candle charts so you can figure out what's going on. Now, if you're trading this, and I had somebody ask me, JJ, do you add to your position? Well, you know, if you're a big trader, guess what? They'll build a position and they'll sell a bit here and then they'll add here. Then they'll sell and they'll add. They'll sell and they'll add. And they'll sell and they'll add. That's how you make money. Right? You guys who want to add size to a position, well, you want to sell a little bit on the up moves and then add a little bit if it comes back into cost basis. That's a more difficult trade. That's not a beginner trade because you got to know how to manage your position and you have to be able to execute without getting all wigged out if the trade starts going against you. So you have to be trained to take those trades. But for those of you who want to trade size, right, and somebody was asking me, JJ, do you add to positions when they're winning? That's how you add to a position when it's winning. Right? You sell into this strength and you cash up. And you use that cash to add. And then you sell into this strength and you cash up. But you're always buying and selling. You're not just holding the thing and hoping it goes higher. Because in the act of buying and selling and doing business in these up and down moves, you get a sense of what is actually going on and you get dialed into the market because you're participating in the market. Now, these are advanced concepts, and 95% of you are not going to get them. But for the traders who trade size, right, the traders who trade size and want to learn how to do this, This is what my advanced coaching class, my mentorship is. Once I teach you how to do things, this is sort of the pinnacle of that, because then you're trading both ways. But you can't do this unless you've trained yourself to take the look below and fail. You can't do this unless you've got a sizable account and you know how to manage risk and you know how to execute, right? No, it's not the risk tolerance, it's the inventory, Hex. It's not their risk tolerance, it's how business is done. Okay? Because here, stay with me, right? I should actually be doing this on another webinar, and we'll do a webinar on this if you guys want. If there are people who want to learn how to do this, right? But when you put a position together, because you're going to be long here, right? You're going to be selling the stuff you bought here, but you also, it's a two-way business. So that's how size trades. They say they trade two ways. They're a buyer under here, they're a seller here, but they're net long. You're net long, you go and you sell. And you sell into this strength, and when it dips down, then you restock your shelf. Think of it like a store. You sell when the people come in, and then when it's slow, you restock the shelves. Like a grocery store. You know what I mean? Does that make sense, Hex? Think of this, if you will, like, yeah, when, this is when the grocery store, I don't know where you live, if you're stateside, Piggly Wiggly or Albertsons, that's the morning they sell, and then at night they restock the shelves, right? And then they sell, and then they restock the shelves, right? It's the same thing. And that's how you got to trade that. And they'll come at a certain point where if we start taking out that 6,700, you're going to have to start competing with the people that you bagged over 6,700, and you'll get that move down. Okay? But that's how the world works, my friends. That's how big traders make money. They're not just buying a product and hoping that they don't buy it at 92 and go, oh my God, I hope it goes to 16, and not make any money along the way. You know what I mean? Because this is all opportunity, folks. So you're buying 1,000 contracts at 84, you're selling them into the 92s, you come back and you bid 500 here, you sell them into the 96s, you bid, you sell, you bid, bid, offer, bid, offer, bid, offer. That's what creates what you guys call delta. Now you see? But you don't need all that stuff if you can pay attention, right? So now we did a look above and fail of 19. So if I was shorting, that's the level here that I need to get taken out. And see, the offer is moving higher. Does everybody kind of understand what I was talking about? That's what that's what's going on. When I see something that is so clear, so like obvious, I have to bring it to your attention. So it's an advanced concept. But I always get people going, "Oh, JJ, you're just teaching people how to scalp." Well, you want to make 200 grand in an afternoon. This is how you do it. That's how you make, 2, 3, 4, 500 grand in a day. But you have the capital to do it. You need the capital to do it, and the skill. But that's real trading. That's what size does. Now let's see. We're looking for a correction to overnight inventory. That's 66.96 right here. That's an area I would be interested in, because we've been above 96 now. This is the factor of time. for hours. So let's see. Let's see what happens. I think it'll be choppy back and forth. And on the daily, we're right around that 200 SMA. I think sideways today. Let's see, folks. We'll see. I've never been a good fortune teller. The big green candles that come after price stability, that's the, excuse my language, okay? It's a Friday, but we're all adults. Cover your kids' ears, right? That's the holy fuck, I'm short, I got to cover, and everybody jumps in at the same time. Those big green candles are like, oh, crap, right? I better cover. And then about 1,000 people have the same thought at the same time, and they all go to take the offer. And then the algorithms are so fast now, they see all the fools running in, and then boom, the offer just jumps, right? Except now it's done electronically, and it's done so fast. It's like the difference between, a guy, playing the spoons and tapping his feet to an orchestra. It is the sophistication of the execution algorithms now is just insane. And we're distributing higher. Look at how the point of control has moved. The point of control was down here. It was down at 67. Then it moved up here. Then it's now moved up here. That means distribution. The point of control is where the majority of the inventory is priced, and the inventory is being taken and priced higher and higher, and that kept bringing buying in. Now, if enough people get short underneath yesterday's high, right, then we'll try and come up into that gap. But let's see, right? We'll see. Most days you say you're short biased and we should test the overnight low. Is it because, well, I'm seeing bids, Dragon, right? I'm seeing, you know why I'm always short biased, right? Everyone, because I've always been a distributor, but I see the offer moving higher right now. And if we accept over that old overnight high, here's the old overnight high. So everybody who was short under 12 went racing to cover up to 25 and change. If we accept over 12 and over that 13 stop, if we go into the open and open here in the 1922s, you're going to force people to start covering. It's like when you force Brady out of the pocket, or you force a quarterback out of the pocket. You know what I mean? That'll force price up. Because if everyone's short under 14, remember, because I was saying I was looking for sellers at 14. If everyone's short under 14, we'll rip higher on the open. Let's see. I'm good, AO. What's going on? No problem. It should be interesting. It's going to be an interesting open. Stick around. It should be interesting. Yeah, let's see how this Magilla opens up. Wow, we still got 10 minutes. Right? You can mess with a lot of people's heads in 10 minutes. Right? You can really mess with people's heads and wallets. 10 minutes, my God, we could rob a lot of banks in 10 minutes. I have clients who can take down an entire clearing firm in 10 minutes. So let's see. What's next? Yeah, we got that gap above us. Sorry. Right? It's Friday. It's been a weird week. So I'm in a bit of a goofy mood. Oh. So 67.14 half. That's what I got my eye on. Yeah, we've moved 85 points since 4 a.m. in New York. Nothing to see here, folks. Business as usual. I'm telling you, the speculators, they're going to be waiting lists for that new Gulfstream. I tell you. These cats are making some serious, serious scratch. What are my thoughts on rollover effects? Hey, Tim, I actually talked about that a bit at length in the Globex video. And what I was saying, usually in the rollovers, usually we roll higher, right? Always, right? We roll higher and get a short squeeze. This time it's not. This time we have liquidation because we are under areas where sell programs will initiate, right? If you're under that 200 moving average, there'll be sellers, right? You're under, and just from an inventory point of view, right? If you look at the candle wax chart, I mean, check this out. Look at all that inventory above 6807. My goodness. So what I'm looking for longer term, I'm looking for entry back into 6621 and down to 6487. Last time we did the last time we did the look below and fail of 21. I think we did that on Sunday night, and I told you guys to watch out for that. If you had taken that trade with size, my God, you would have been done your week by Tuesday, Monday, right? Because we had that move all the way back up to 6807. So, and then there's inventory. There's people who are stuck long here. They're selling out. The short sellers who are trapped here, right, and who are trapped here, right, they are using that opportunity to buy it back cheap before the rollover. So it's a real push-pull. That's why it's going to be very interesting. I'm going to be very curious to see what happens on that open. And do we get above 14? Do we get above 14 or do we stay back and flush back down? No, it's not overhead supply that creates the stabilizing effect. It's sideways motion. You see when it goes sideways here? That brings in buying. And then it goes sideways higher, that brings in buying. Then it goes sideways higher, that brings in buying. You get it? You know how you think of it, Dragon? You think of it like you see people standing in line at a nightclub, and then more people stand in line, and then more people stand in line. Because people, oh, this is a really hot club. Let's go check it out. You know what I mean? That's what creates overhead supply is people trapped long. That creates selling and downward pressure. That's resistance. So it's the sideways motion. That distribution that's sideways at higher levels as it creeps higher, that's what creates price stability, and that's what brings people in. Exactly. The overhead supply is like people leaving the line and going some bingo. Now you're cooking with gas. See, everybody understands the nightclub lineup. Hey, Saluretta, what's going on, man? What kind of trouble did you get up to last night? uh, it was really funny. Retta and I have known each other for 11 years now. And it's funny because he was like 21 years old. I'm teaching him how to trade. And he was teaching me how to use online dating platforms. Because I was, the typical, 40-year-old divorce guy. Oh, it was so funny. Uh, I still remember that. That was so funny. Hey, Howard, shut her down, brother. You're up. Keep that money. Oh, it was funny. Yeah. Hey, Mike, what's up? Oh, I think today's open's going to be like an episode of Columbo. It kind of takes a little while to get going. Happy Friday. And you young people who don't know what Columbo is, do yourself a favor. It's a great TV show. It's hilarious. Okay, we're coming a lower here. If I was short 910, I'd feel okay about myself. Let's see what happens when we get down to 4. Exactly. It's kind of a Columbo opening. We're kind of fumbling around. Where did I leave that cigar? Let's see what happens here, folks. 13 is the... Yeah, there's been a selling. Hey, Ed, what's going on? Good to see you, brother. Yeah, you're right. Yeah, Ed's right. I should move that. There it is. There's that 13 seller. Stick it out like a sore thumb. So if you're short, 13 is your danger zone, right? As Kenny Loggins would say, right? If you're short 7, 8, 9, 10, you're short down here. 9.5 is your first kind of like, it's like a warning light on the dashboard, like, and then 67.13, that's the danger zone, because if they take that out, that means the sellers have seen buyers and they're going to jack prices up to 16, 17, 18. So far, minute by minute, the offers are moving lower. See? The offers are starting to move lower. They stop selling here right at 67.02. So if you're a short seller, right, that's where, like, say you were short 10 or 9 against the 12s, you'd put some bids in here, right? You go and you put some covering bids here, right above this white line, which is 4/4, 4/2, because you can see how they're front running that level right now. So you'd put a bid here, and then I'd put a bid underneath it, just above here. So just in case it does that and craps down. Oh, there's that bid. Now that seller at 12, wow, went right through it like a hot knife through butter. And back down. Now if we accept above 13, 14, then we'll push up to the 16s. So if you're scalp long, say 12, 12 and a half, put some offers out, and now you're in danger, because if it doesn't get over 12, 13, right, and you're long 12 and a half, see how you walk through these trades, right? So you long 12 and a half, sell 14 and a half, 15. It's going to come back down and test. As it tests, it'll find the bid, because anyone who's short 612, that's when they had to cover off the open. Now let's see. Just like when you turn on a garden hose and it's kinked, you get that big push of water. Then it calms down. See? Let's see. Watch the 12s. Just where Ed said that seller is. If that turns into support, that means the position under 12 is secure, right? I'll wait a little while. I'll wait for the next candle. Uh, and remember, if you're short 13, 14, 12, go put some bids down here under 8, right? You should be covering the 9s and the 8s. Take 2, 3 points off that candle. If you don't take them, somebody else will. See? Somebody else took them. So if you were short 14 or 12 and you didn't cover some in the 9s, somebody else took your supply. Get it? That's how you got to think when you're trading this thing. I'm short. I got to buy them back. Oh, there's buyers under 9.5. Maybe I'll buy 9 3/4. Get what I see? Right? You can't, if you're trading the open on chop, you have to be very quick. So you have to train yourself to trade that way, right? And that's what we do at the Trading Syndicate. We want to train you so your actions, that connection is quick. So it's like breathing, right? And the only way to do that is through repetition, repetition, repetition. See how there's bids at 9.5? And the seller is still here. They let it breathe for 3 minutes. Let's see if they can come back up to that 14. The more people who short it under 12, the higher we're going to go. So if you're short, long, say you're long 14, 15, right? And you're buying above, see the cost basis is here. So if you're buying above there, you'll want to be, and you know that there's a seller here, you want to buy 12, 13 and sell 15, 16. You might want to get 24, but you're not going to right now. You know what I mean? Trade the rotations, my friends. Trade the rotations. Now, if we break that 9.5, if you break those bids, we'll be looking for 4.25, this next white line, and ultimately down to the 2s. That means we've ran out of buyers and we've got to go put it on sale. But if we can keep it above 9 and take a run at 12, you might force people to short cover. Let's see what happens. So if I don't see a clear trade, I'll sit back and I'll watch. So now I'm looking, do we take out the 6s and hit the 4s, or do we creep ourselves back over 12? And if enough people have shorted 9, 10, they'll race to cover 12, 13. Get what I'm saying? Does that make sense? Think about it. Have a think. Like little rotations. That's what's going on. It's just a rotation. Now, see how we're coming down to those 6s? So it's not like a big surprise. We talked about this, so you're ready for it. Now, do we come and do we bid the market here? And if we do, can you buy 4 and sell 8? Because there's a seller at 9. See, now you know where the sellers are in the market. There's no mystery. There's no mystery in this at all. The sellers were here, they moved here, they moved here. So don't go long. Wait till it looks underneath 2 and comes back up above if you have to take a trade. If you're a new trader, just wait for the edge. We're nowhere near an edge, so there's no reason to take a trade. Now, if the market can't get back up over the 4s and over that open, then all of these people are going to start losing faith and pumping out of it or dumping out of it, and we'll be looking for a test of VWAP at 92. I bought a little at 6 and I'm selling them at 8. Why did I buy 6? Because I saw that candle. And I was thinking, how many people are short under 9? When they go to cover, you're going to push higher. Right? Now we've got people trapped under 12. So let's go test 12 again, and let's see if there's buyers at 12. Because if we can't get under 12, we'll rotate up to 17, 18. Watch. There's the 16s. So if you were long 12, sell a little. Right? Don't hog your contracts. Right? Watch the bids at 12. Watch the offers. Sorry, watch the offers. There you go. Offers lifting. Right? So long 13, selling 16. Thank you very much. Right? And just sell into this strength because they're going to sell into it. Everyone else is selling. You sell too. There you go. Right? So you saw that move happen. You saw how I told you that there would be bids here. Right? So what we did was we pumped it up, brought it down, caught everyone short here, and they all went to cover at 9, and then 10, 11, 12, and they pushed it all the way back up. Now do you see how markets work? You guys see that? Anyone? Cool. Good stuff, Igor. Good. Good, good, good. Cool. That's the beauty of these algorithms. That's the beauty of how well they've created this market. It's not easy to figure out. Oh, don't make me crave coffee liquid. I've only allowed like 1, 2 cups a day, and I'm at my limit. Ugh. So the new contract is still 103,000 contracts versus 445. So I'll do the rollover on the weekend, and I'll post it in a weekend update video. So I'll have new levels. I'll have a new chart book out too on Sunday night. Oh, I know. I'm just craving caffeine. Oh. See how remember how we talked about how everyone was short under that old overnight high? Look at all the short covering. You can see it. There it is. And now we're in this kind of spike Let's see, the target is now that overnight high. That's our target. So if we stay above 14, your next area where you're looking for a sell is 31. Okay, and the 31's the top of that candle. For the longer term traders, 14 to 31, that's where you're looking at. And we've got to take out that 25. If we could take out 25, stay above it, we'll weasel our way up to that 30 area. Okay, so just be careful if you are short. If you're short and we accept over 25, watch your whiskers. I'll draw in the stops. There's a stop here at 29.5. There is a stop here at 32. Is that the previous day high? I think it is. Yeah, it is. Yeah, previous day high is here. If we take out yesterday's high, my friends, right? If we take out yesterday's high, that will create a pain in the ass for the shorts. So be careful, right? They're running the stops now. They should sell into this a little bit, right? The large traders will sell in, and you'll see the volume go up just there. See how they're selling into it? Because that's where the buying is. That's where you sell, right? Because if you trigger that stop, see, boom, there's the buying. You sell into it, and that's called backfilling. That's how you can sell 500, 1,000 contracts, right? So, but if everybody sells at the same time, it'll push price all the way back down. So let's see where we find the bid. We can use these 1-minute candles to help, right? So 1, 2, 3, 4. 7, 8. Simple math. There's the overnight high acceptance. We're going to take a run at that 29.5 stop. If we take that stop, we're going to gun for the previous day high, making a run for the border just like Taco Bell. When it comes back down to 29.5, there should be bids. Watch. Backfill, backfill, backfill. It's not. This is the cost basis, 2 times profit, 4 times profit, 8 times profit. The cost basis is blue. Profit is green and purple, and then discount is red and whatever other color I use, that light blue. Make sense? So this is cost basis times 2, profit times 4 times 8. What did I say, 31? Well, we took out 31, eh? That was at yesterday's high. Now, if we accept over 31, you're looking for 43. Yeah, that's a short squeeze, my friend. Welcome, welcome to the look at the volume right at the previous day high. Those are shorts getting bought in or buying themselves in. As we come down where that stop at 29.5 got run, see how it bid? See how we came down here? And boom, straight back up. There you go. Looking for 67.43. Oh, there's a stop at 41.5, and there's a stop at 44.5. Nice work, S-Pill. Nice. It's always nice to make a little scratch on a Friday and then chill out a little bit. So this is all just people who are short underneath yesterday's high. They were all looking for lower. Everyone's looking for lower. They're shorting the hell out of it yesterday in the overnight, off the open. They're adding to it when it goes up. Then it's like, holy crap, it's over 69.25. Let's all go cover. And they all go cover at once. And it's the same thing every single time. Now, the people who have been in my room for a while, you should have all have seen this, right? You've all seen this play out over and over and over again. Let's see. Back down to the previous day high, bid, right? If those buyers see large sell orders, they'll drop their orders down to 29.5. If they run out of supply, they'll push price back up like they're doing now. But there's a seller at 33. That's cool. Right? There's 29.5. Bids 29.5, it'll go up to 32. There'll be a seller at 32, 31.5. Well, not an aggressive seller. Look at all that volume. Making sales. Making sales, making sales. Right? Do we fill the gap? You know, I said, what did I say this morning? This is one of the times that, you know, we usually fill the gaps pretty quick to the downside. But we haven't yet, so hey, let's see. So your gap fill is what? 48? What's the gap fill? Somebody give me the gap fill. You should have it off the top of your heads. 49.5, 50, somewhere like that? Anyone? Bueller? Ooh, you guys are bad. 50, thanks, right? So gap fill is at 50. This is my 49 quarter, right? So we went into the gap. We found sellers. That's okay. It's a two-sided market, folks. It's a two-sided market. Now we're going to backfill. Look for bids at the overnight high. If you're short 32, put some buy orders at 26, right? And then you could put some buy orders under 25. If you don't get filled at 26, 27, right, go pay yourself, right? Don't fall asleep. Beautiful, right? If you're a larger trader and you've got bids under 25, how they fill will tell you about the nature of supply. See how we come right down there, hits that bid, bounces. But they're going to sell into it. So anytime a market bounces, I always ask myself, where the heck are they going to sell into it? And that's exactly where they sold into it. Your next target will be down in this 19 area, 19 and a half, 19 and a quarter. Okay? If you're looking for a long, wait for a look below and fail of 19 quarter. And to make things more complicated, there is news in 10 minutes, so be careful. Right? No need to overtrade on a Friday. Right? There's no need to overtrade on a Friday. Make your money, keep your money. That's the goal. Thank you for reminding us, Truth, about the news. Very handy. Oh my goodness. Couldn't get down to 19 and a quarter, huh? Buggers. 20 and a half. Now, there should be sellers. What's that level? 25 3/4? There should be sellers. Go put it on sale a little bit. Here we go. Looking for 24 quarter. Ooh. Right, if I was long 21, I'd be a seller here. If we accept over 26, you're looking for 29. Wow. Watch as it comes down. I want it to come down and test these lows. And then I'd get long again if I was thinking about getting long. But I'd really prefer this. Nice work, Nathan. Nice work. Get in there. Get in, get out, get paid. Watching this candle. If you are long the overnight high, know that there's going to be a seller at 28, before 28, right? Just so you know, right? Whoa, long 25, sold one at 27, and I'm going to get flat here at, holy cripes, 32. Thank you. Thank you, Mr. Short Seller. And I bought two contracts here. I sold one right before 28. And then some short decided, oh my God, time to rip. Boom, they all went to grab it, right? How long before I stopped noticing the winners I exited and instead the losers I avoided? Ooh, a little philosophy here, eh, Caesar? You know what? You should DM me and we should talk because you told me you trade size. So let's have a chat. Oh, there you are. Cool. Sounds good. We'll talk next week, brother. Cool. And that's what, when you come into the trading room, right? And let me do our little, it's 3 days, 3 free days. If you sign up, you get our AI for free. Come check it out. I'll be in the room on the weekend. I may do a session tomorrow on contract rollover. I figure nobody wants to have a Zoom at 11 o'clock today, right? So I might do a Zoom. Anyway, I'll do a recording on contract rollover, and I'll record my process. Oh. These first half-hour candles, they seem to be longer than usual ever since the time change. you know, oh, it's just because it's the pressure of size, S-Pill, right? It's the pressure of size. And the thing is, have you trained yourself to trade in size? so you can be comfortable in the trade. That takes a little bit of time. It'll happen, right? That is, you know what that's like, S-Pill? That's like you usually bench one plate, and then you try and bench two plates, but you don't have a spotter, right? That's why you get that anxiety. I think there's still 30 minutes long. I don't know. 30 minutes seems longer in the last couple of days, Kevin. See you, Mike. Have a good weekend. Thanks for being with us this week, right? No, you will. You'll. It's the comfort of trading size. You know, um, the Duff. When Turney Duff was working at Galleon, and they put him on the phones to trade, they would say, buy 100,000 shares from Knight, sell 100,000 shares to Goldman. Buy 50,000 shares of, you know, some crap stock, and then flip it and sell it to another market maker, just so they would get used to putting in orders. Half back again. Thanks, Raj. What Raj is talking about is this little white letter here, which is half back or the middle of the zone. Everybody, hey, listen, guys, Espill, Cesar, everybody struggles with trading size when they first start out. Look below and fail of 19 quarter. I am not long. I'm not long because I was typing and I wasn't concentrating. So let's see what happens when the next candle opens. 19 to 22 is beautiful business. There's going to be a seller at 24 and a quarter. So if you're long 19, sell them like you stole them. Nice trade, Nathan. Beautiful. Beautiful. See, a lot of you, what is a large trader? It depends. For me, I think if you're trading 50 to 100 contracts, 50 to 100 E-minis and up, maybe you're a bit of a larger trader. Of course, you don't start trading out 50s and 100s, but you work your way up. You know, you go 10, 20, 30, you know. But because I'm not expecting, 100 people to show up who have $5 million accounts in a retail trading room. So I'm going to do it, Attila. What I'm going to do, brother, is I'm going to, start with 5s and 10s, work our way up into the 20s, 30s, you know? See, that's the trade I missed. See, I was flapping my gums. Should have been long 21, selling the 24s and 25s. But that's okay. No problem. No problem. Yeah, trading size is um, what I think personally. The reason why a lot of people have trouble trading size is because they're not scaling. They're not scaling out of the position and then adding to it again when it's advantageous. And that back and forth, I think, gives you a more direct connection with the order flow. It's kind of like driving, it's like being in a self-driving car versus driving a 1967 Jaguar E-Type that everything is manual, where you get to feel the road. You guys don't get a feel of the order flow because you're in and you're hoping for an exit, but you don't have your hands in the market. And I'm not saying overtrade, but if you're trading size and say you were long 50 contracts here, right? I'd have been selling, sell, right? And then when it comes back down, right, you buy them back and then you sell them back into that, right? That's what we're doing as wholesalers, right? But we always have a bid or an offer out there, right? And that helps you trade size because you're getting constant feedback from the market. When you're in a trade, you're not executing around that trade or executing into that trade or out of that trade, you lose touch with what's going on in the market and you start hoping that trades were going to work. I'm looking for bids here, my friends, at 12. So if you were short 18 against 19, put some buy orders down here. There's your bid. There's your bid. Cover a little here and put some buy orders at 10. And if you have more size, put some buy orders at 8. That's going to give you feedback. Because if you're short 18, right, with a 19 and a quarter stop, and you can't buy any product at 12, you better start covering, right? But if you can, then you can. This is what I'm talking about. This is what I'm talking about. This is what I'm talking about when you're trading size, right? Because if you're executing, then you know that there's no seller, right? If you're executing, then you know there is a seller. So I can stay short. That's why you guys aren't getting good feedback, because you buy a position and then you wait for the target, but you're not trading to that target. Exactly. You're sweating bullets because you need to get rid of it fast, and then you get rid of it, and then it goes. I'll teach you how to trade that. You got to put your fingers in the dirt, and that costs a little bit of money, right? You got to put your fingers in the dirt, and that costs money. But doesn't mean we have to throw away money. We can still be smart about our business expenses. Do you see how they found the bids at 12 just there? Right? So if I was short 18 against 19 and a quarter, and I didn't cover 12, and it gets back to 18, then I'm Gomer Pyle, right? I want to get paid, right? I need to get paid. Look, we're at 16 already, right? So that's why I said if you're short 18, put buy orders at 12, because they're going to tell you if your trade is working. There you go, Howard. Beautiful. 4 points is a beautiful thing. You're done for the day. Right? Beautiful. And that's what we want to do. We want to make traders who are practical, who are street smart, and don't fall for BS. Right? They can see through the BS and cut through it. Right? See, look at that. There's 17 and a quarter. Well, first what you want to do, Truth, is get consistently profitable on 3 to 5 contracts. That's the Proper Villain Academy, that's a little different. That's where I teach you how to hide a short position in Switzerland for a year. And how to bribe the lady at the depository trust company with flowers. That's a different course. Right? So, Truth, getting back, you want to get consistent on 3 to 5 contracts, because that builds your foundation. And that you know what that does, Truth? See, trading size, you got to learn how to take a punch and shake it off. Right? You got to learn how to take a punch and shake it off. And that's what trading that 3 to 5 contracts, that's what it does. It gives you the ability to take a punch, shake it off, and get back in there and be clear-headed. Because what happens to a lot of traders is they get into a trade and listen, this has happened to me. So it's not like, I'm going, oh, it happens to everybody but me. No, I've gone through everything that you've gone through. I've gone through, and probably worse, because I'm supposed to be smart. I'm supposed to be better, but you still make those human mistakes. See, because when you get punched in the face, right, you start seeing Tweety birds, and you zone out of the trade when things start going against you. This way, if you build a good foundation of execution skill, when you get punched in the face, you'll be able to trade out of it. You'll be able to duck and move, right? Does that make sense? So that's what we're going to focus on. We're going to focus on that, how to get you in and out of markets, how to train you to execute without hesitation, right? And then we'll teach you how to hide short positions in Switzerland and bribe the ladies at the depository trust company. With muffin baskets and flowers. Worked like a charm every time. I could find out where all the positions were, or if new stock certificates got issued. All right. Now we're back in cost basis. Remember that cost basis that we had? Big distribution. Look at that. So we're going to come back into this area, and let's see if we find a bid. Remember our green line here at 4? No, I'll never go to Denver. I'm banned. If I go to Colorado, I'll be shot on sight. I cannot go to Colorado. I am scared to death of Colorado. It is one of the scariest places in the world. Looking for that green line at 6704. Oh. That's not a story, Tim. That's a horror movie. For me, Colorado is like Amityville horror. It's Amityville horror for traders and stock promoters. Oh, good stuff, Cesar. Good stuff. No, I've never been there. If I ever went there, you'd never see or hear from me again. All right, coming down, we're testing that green line, and what a coincidence, it's right above VWAP. Think of me as a vampire and Colorado as daylight. So bids. Now let's see. So if you're short above on the look above and fail of 19 and a quarter, this would be a great pace to start paying yourself. Take back your 10, 15 points. If you're a big trader, you're really looking for a break of that 66.99, and your target will be down here at 95. Yeah. Let's see. And we're under 14 again. Distribution over 14. We're dropping into that bid. Poor low. Poor low at VWAP. That's no surprise. Pour me a drink and I'll tell you some lies. There we go. Under VWAP. There'll be some short covering here. If you buy into that VWAP move, make sure you sell into the upper move into the 7s. I'm long 5 and I'm selling 7. Thank you. Just on one contract. So, didn't I tell you there'd be a bid there? I cheated. I mean, VWAP was there helping me out. But if you were short, you should be covering down here, right? Now, if you're a big time short person, if you're Daddy Warbucks on the short, that's where your bids will be. But make sure you get them in because when you break VWAP, it's going to open the door to a lot of buyers. Nice work, Nathan. Get those payouts. Beautiful. Get paid, my brother. Get paid, get paid. That's what we want. Right? We're not here for the dental plan because they don't have one. We are not here for the dental plan, ladies and gentlemen. They don't have one. Okay. Doing the VWAP dance. Yesterday, the point of control. So the cost basis of yesterday was here. Okay? That's where yesterday's inventory was priced. And we had a great time. We added to it in the overnight. And then when we went and sold it here, all the way up here, all the way back down. So I'll be looking to see if we slow down in this area. Oh. Oh, there we go. Yeah, just back and forth trading. We'll see where they bid this thing. Now, this is another test of a market. When you liquidate back to VWAP, how strong are the buyers underneath VWAP? Because if VWAP holds, we'll rotate all the way back up to 12. Okay? But if VWAP breaks, then we'll hit these levels here. So if you want to hold trades longer, this is when you should be paying attention, right? Because if you're a short seller, say you're short 50, 100 contracts at 18, 19, right? And you've covered, maybe you shorted 50, right? And you've covered half of your position here, right? So you've shorted 50 contracts. What you want to do is you want to bid 5, 5, 5, 5 down the ladder, right? Down at these levels. Put lookout bids in. If they get hit, that's great. If they don't get hit, it means you got to pay up, right? Go cover. So you covered 25 at 6,700, 6,700 to 6,704. You cover another 5 at 99. Now you go put some bids down under 97, 96. Scale in and out of your trades because the scaling in helps you develop confidence in the trade because then you can feel the price action. You can get feedback from your orders. That's what trading is about. You can't get feedback from a chart. Oh, I don't care about that S-pill. Up week, down week, flat. I care about where the bid is, right? I could care less what if we have an up or down week. Not to be rude, right? But now is when you want to be focusing, right? right? I'm telling you guys how to trade size. Mark the sellers, right? Right? This is the thing about concentration, right? Who cares what's going to up, down, sideways? What are you on, CNBC? Right? You know, focus, man, focus, right? Unless you got on a $10,000 Brioni suit and you're on CNBC trying to impress the ladies, right? Waving your Patek Philippe around, right? Look at me, right? You know, concentrate, brother, concentrate. Dig in, dig in, dig in, dig in, right? This is what focus is everything, right? You want to be able to, you know, I've traded through a couple of earthquakes, a few building fires. You know, we used to have a broker who used to pull out a knife and threaten people. You know, I've traded through all of that. You know, Crazy Harold, you know, he'd pull out his big knife and start waving it around. So you got to be able to concentrate. See? So if you were short 50, you're short 50 at 16, 17, right? And you cover half at VWAP, right? Now you've covered maybe another 5 or 10. See how your trade's making sense? As it's taking these lower stops, right? Where are your next bids? That's what you should be thinking about. Does that make sense? You know, be dialed in. Don't be watching CNN and looking at news coverage and all of that. This is, you know, you should be watching this like your life depends on it. You should be watching this and these levels like your life physically depends on it. That's how you get successful in this business. Right? Somebody says something to you, you don't even notice that they're talking to you. Right? Focus. Right? Just don't let up. Don't. Your cell phone shouldn't even be anywhere near your desk. Sense of urgency. Exactly. You have to have a sense of urgency. You have to have focus. Because I'm telling you, everybody else in the business that you're trying to make money in, they have that sense of urgency. Right? Like in the 80s, the guys who trained us in the 80s, right, they're saying that they got from Liar's Poker was, right, when you get up in the morning, you get up and you better be ready to bite the ass off a bear, right? So when we went in, we were loaded, locked and loaded, right? And it's a battle. So that's what I want to convey to you guys. Don't be like, do, 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 you know, focus. So had you not covered your entire position at VWAP, you could have covered some down here, and you could have covered some down here. And you use your fills, right? Cell phone is another chart screen. Yeah, but then you start going on TikTok videos. You start looking at the cat and the duck who are friends, right? And then you miss your entry. Let's see if the sellers are there at 99 3/4. That's why you cover your shorts, my friends, because you don't know where the bid's going to come in. Right? Anywho, that's pretty much it for me today. So it's going to be back and forth and back and forth. As you can see, we looked above yesterday's range. Okay. We looked above and came back in. So it's business as usual again. What did we do at nighttime? We looked below and came back in. So large traders who trade profile, what they'll do is they would have bought the look below and fail, right? They bought that previous day low, sell it up, and then if you're a short seller, you do the look above and fail of the previous day high, maybe the overnight high, and cover. And you're going to come back to the close. So my friends, this is a rotational day where they blew out the stops, right, to get more suckers to come in, really. So look at that. That's from the outside in. It's the same thing we teach you here is happening here. It's the same business. It's just happening on a smaller time frame, a smaller, more manageable time frame. That's why you can manage losses in a 1-minute candle chart, but you cannot manage if you were long 67.25 and you're still long. That's not how you manage a big trade, right? It's how you go broke. So just look for that back and forth today. That's pretty much it. Does anybody have any questions? Do you guys understand the business reason why we're doing business, why we're taking these trades, where our risk is? You know, if you don't come into the trading syndicate, we will help you with that. You know, we have a 3-day trial going on. Come check it out. At least you'll learn what inventory and cost basis are. You know, I did a bunch of videos this week. They're all in the room. And I want to thank everyone for being with us this week. No questions? I think you guys are ready for the weekend, huh? I get it. I get it. I am too. Thanks, everyone. Have a wonderful weekend. Stay out of trouble. I'll get some videos out this weekend. Those of you who join our trading room today for the 3-day free trial, I will be around this weekend. So if you join the room, reach out in Discord, message me. If you want to have a chat, I am around. Appreciate you guys. Have a wonderful weekend. Be safe out there. Right? Don't push your luck on a Friday. Always, you know, be a little shrewd, be a little cagey, right? And trade safe out there. Thank you so much for being with us. We appreciate you. I'm JJ, and this is the tradingsyndicate.org. Thank you for a wonderful week, everyone. Bye for now.